Okay. We are live. This is Senate Finance. We are back at our regular time. Today we are going to take up H-137, which is, I believe, the DFR housekeeping bill. So Maria, you're, I think, on first. Walk us through this.
Good afternoon. Nice to see everyone. Maria Royal with Legislative Council. And this is, the chair mentioned, as H-137, which did initiate from proposals put forward by the Department of Financial Regulation. The House Committee on Commerce did add some other provisions as well. So I just wanted to make that distinction, but you'll hear from DFR, and I think they're generally supportive of what's in here and past the House. So I am going to share my screen. Pull it up.
I think before we finish with this, I told the committee I have 129 up there.
Yep.
If it meets with the approval of DFR, I'd like to have whatever it does to this bill. But sent the bill over to DFR for comment. So
Okay.
that's
Okay. And that, I think we're reviewing the language on maybe Tuesday of next week or Wednesday of
whatever we
next
can
week.
get you in.
Okay. Yep.
Okay.
Yep. I think it's on my calendar, right?
Okay.
Okay. Great. Well, we'll get through. So some of these are definitely technical corrections, housekeeping proposals. So I won't spend a ton of time, but I will just kind of explain what they are. So section 1, this is a section of law that has to do with the confidentiality of any data collected by the department in its investigations of its regulated entity or examinations. You can see under existing law, it references entities that are registered and licensed by the department, by the commissioner under Title 8 and under Title 9. This title is Title 8, under Title 9. But the problem is there are other entities that the department regulates that are in other titles, such as Title 18, pharmacy benefit managers, and Title 21, self-insured workers' compensation plan. So I believe this is consistent with the purpose of the statute, which is all regulated entities are subject to the same confidentiality provisions. So I think that fits into the category of clarification consistency. So that brings us to section 2 of the bill concerning mutual insurers, but the only change is very minor. You'll see on page 3, line 5. There's a reference to section 75, which is a repealed law concerning the department's rulemaking authority. And so this is just updating to the appropriate existing law on rulemaking. Then that brings us to section 3 of the bill. And this concerns rate filings in the property and casualty insurance market. And under specifically in what are considered competitive markets, they're not traditionally regulated. However, if a company does want to increase its rates, it has to file the information with the commissioner, as well as any supporting documentation. You can see under existing law that documentation is not due until 15 days after the effective date of the proposed rate increase, if it's a rate increase. So the proposal here is to make it 30 days prior to the effective date to give ample time for the department.
Post.
That's what it is under, and I think that, I'm guessing it had to do with the fact that it's considered a competitive market, and so the market controls the prices, and it's allows the commissioner to, review after the fact, but generally you let the market determine prices. So in any event, I think in practice, and you'll hear from the commissioner, acting Commissioner Biggleton, but I believe the practice is to get the information before the effective date, current practice, despite what the current law says.
Okay.
And then section 4 on page 4 of the bill, in Title 8, there's a particular chapter that has to do with unfair practices in the insurance market generally, kind of the consumer protection provisions applicable to the insurance industry. This is adding a new provision related to affordable housing and what's considered unfair discrimination with respect to affordable housing. And basically, we'll read through this once. It specifies that an insurer that issues or delivers in Vermont a policy of insurance covering loss of or damage to real property containing units for residential purposes or legal liability of an owner or renter of such real property. And then it lists a whole bunch of things: shall not cancel, refuse to issue, basically take adverse actions with respect to a policy based on the following. And so what's then listed in Roman numerals 1, 2, and 3, 4, yeah. Things such as if the building, a residential building, contains units that are required to be affordable to residents at specific income levels, and that can be under federal law, state law, municipal law. 2, whether the property owner or tenants or shareholders, as the case may be, receive rental assistance, maybe under Section 8 of federal law, so Section 8 housing. Again, these are things that cannot be used to discriminate adversely against the property owner or renter.
This is basically saying, I know there was concern last year that there were major increases in, I think it was Champlain Housing Trust.
Okay.
And this basically says you can't discriminate against its own homeowner's liability. Yeah, insurance, based on the fact that
It is
affordable housing, or people are
Or the
getting a
income
rent
level.
subsidy,
Yep.
and or the income level of the occupants.
Yes, and then the final one is if the building is owned by a limited equity cooperative, public housing agency, or cooperative housing corporation. So then again, you'll hear from the department, but I believe what was explained is that this is typically not acceptable under current law. That's their interpretation, but wanting to make it explicit, probably in response to some things that have been happening in the market. And then B, subdivision B, there just clarifies that any other factors that are permitted under current law are not prohibited. This does not change that. So that's all that statement is. So section 5, I think section 5 through 14, all pertain to captive insurance. Different forms of captive insurance. So these are companies that self-insure in Vermont. And so what section 5 does, this is the language that gives the authority to captives to provide insurance. And you'll see on lines 14 through 15, that is a reference to the law in Vermont that allows insurance to be offered, and what types of insurance can be offered in the state of Vermont. And I don't know why, but under the captive law, it started to reference like each type of insurance, like itemizing them, and a few were not included, such as inland marine insurance. So I think the proposal here is to say just any type of insurance that's permitted in Vermont, a captive can be formed. There are other requirements you still have to meet, but it's just basically saying there's no reason to leave out specific types of insurance that aren't cross-referenced. Then I think we get to
And then
another.
our captive insurance bill for the year.
This is, yes.
Wow.
Yeah, it's all incorporated into one. Yep. So section 6, this amendment is going to come up in various sections throughout this bill because this comes up in existing law in a couple of cases. And so there are provisions of law that require certain reports and filings to be signed under oath by, and it'll say like the president and secretary of the company or the executive officers. The issue that was identified is that some captives are formed as an LLC, a liability company, or as a reciprocal insurer, and they do not necessarily have executive officers per se. So all this is doing is saying if the captive is formed as an LLC or a reciprocal insurer, those who will have to sign under oath are two individuals authorized by the governing board of the entity, whatever, in whatever form that is. And so I'm not going to repeat that whole explanation. I will say it comes up 7 other times in the bill. So,
Okay, and
okay,
this is specifically to captives and
all of them are in captive. They're all related to captive.
regular insurance documents, some regular documents, and these are insurance documents.
Yeah.
Have to be signed by the president, CFO,
Yeah, I
something.
might say executive officer, but
Yeah.
this is just saying that we don't have an executive officer.
But if you don't have an executive officer, which seems to be
Yeah.
specific to captives, then a representative of the president of
Right,
the
so if
board.
they're a corporation, they have a board of directors. If they're reciprocal insurer, they might have a board of governors. Right, so just recognizing that there are different governance structures depending on how an entity is formed. Okay, so section 7, this is just cleanup. The reference there to chapter 21 is specific to LLCs. That chapter was repealed and replaced by chapter 25. So just updating the cross-reference, same thing, on lines 17 and 19 of that section. And then on page 10, so this whole statute that we're going through references if a captive is formed as, so I'm just looking at existing law, as an LLC, they have to comply with the general laws on limited liability companies. If it's formed as a nonprofit, it has to comply with Vermont's nonprofit laws. So what's being added here is, because some captives might be formed as mutual insurers, and this is just specifying that you have to follow the general laws applicable to mutual insurers, as well as the captive laws. And if there's a conflict, then the captive laws control. So this has been done before for nonprofits, it's been done for LLCs, and now it's being done for mutual insurers. We're trying to get the whole gamut of legal entities that might form as a captive. Then section 8 of the bill concerns. Going to have to remind myself when I look at the amendment. Mergers of captives. And so so might be the only change, but one change is again, has to do with the governance of LLCs and reciprocal insurers.
And section 8, we're now.
That's in section 8, and I think there might be one other no, that is the only substantive change there in that section. And again, that involves mergers of captives.
Okay, so captive mergers.
Yep.
What do they have to do if they merge? This is who signs it?
This is the same one that we reviewed before. They don't have an executive officer. So that's the only change, just allowing a little bit broader application.
Okay.
Same thing for section 9. This is filings with respect to financial reports. Again, line 18, if they don't have executive officers, they can be 2 individuals authorized by the governing board. And then another change, substantive change in this section. So this concerns risk retention groups, which are a type of captive insurance. But what's being proposed here under existing law, it says that the reference there on line 19 to subdivision 602C3 is to confidentiality provisions. And it says that those confidentiality provisions shall apply to each report, financial report filed pursuant to this section. And the new language is, except that such subdivision shall not apply to reports filed by risk retention groups. And the explanation given by the commissioner was that risk retention groups are required to have certain of their documents and submissions made public by NAIC model act. So, and again, you can hear more about that, but it's meant to conform with other legal requirements specifically related to risk retention groups. So section 10, if a captive wants to provide reinsurance, this is a very similar provision to the one that said a captive can offer any type of insurance that's permitted in Vermont under Vermont law. This is simply saying a captive can provide any type of reinsurance for any type of policy that's all insurance policy offered in Vermont, which is a reference there to section 3301 on line 3. So any type of insurance they can provide reinsurance for on their own risks or of their parent, affiliated companies, and controlled unaffiliated businesses. So just broadening companies they can are eligible to be provided reinsurance. Section 11, this is just that broadening. This has to do with captives that want to go into a dormant phase if they're pausing business for a period of time. Again, they're standing from executive officers to individuals authorized by the governing board. Section 12, same thing, related. This is related to branch captives and the documents that they need to file for LLCs and reciprocal insurers, any individuals appointed by the governing. 13, same thing, but it's specific to special purpose financial insurance companies. Okay. And that brings us to section 14. So this section has to do with the governance standards that are applicable to risk retention groups. And it was based on a model law that you enacted, I think, a couple of years ago. And what I most remember about that law is it was incredibly complicated in terms of the outlining. So there's subsection G, subdivision 1, subdivision A, and then Roman numerals 1, 2. The point is, on line 7, where former law said Roman numeral 1, it should have been subdivision C. So this is just a conform.
This
is
a Scrivener technicality. Numbering technicality.
It is a technical change. This actually more closely conforms with the model law on which it was based. I remember working on this because it was unusually confusing. But this reflects, it has to do with what's considered a material relationship for directors on the board. And so C is meant to be its own standalone requirement. So I would categorize, and so that then meant there's lots of other renumbering and relettering.
And a lot of this is just making clear that if you don't have executive officers,
Exactly.
then someone authorized by the board of directors, I assume upon their
Or
vote.
the governing board.
Yeah.
That's exactly right. So that's exact same change in this section as well. In subdivision 9 to 15. So I believe those are all the proposals that initially came from the department, and then
Okay,
from here on were things that came up in commerce.
okay.
And so section 15. This section deals with entities that are required to get a money transmission license.
Okay.
So these might be, payment apps.
And this was
Payroll
the change we
processors.
made last,
Oh, well, you made a lot of changes. I
Yes.
think that was last year, reorganized the money
Yeah.
transmission chapter. Very generally, you had proposals related to virtual currency kiosks. You did a lot of reorganizing of this chapter. What's proposed here, in current law, there are about 17 exemptions. Entities that don't have to get a money transmission license. And so what's proposed here are to add 3 more exemptions. And those are specifically defined, subdivisions 18, 19, and 20. So, for example, a company or a person that performs payroll calculations, prepares payroll instructions, prepares and files state or federal income withholding tax reports and unemployment insurance compensation reports, or provides other payroll related services, but that does not engage in the business of payroll processing services, or otherwise engage in the business of money transition, then they are not required to get be licensed under this chapter. Then section 19 is if you do provide payroll processing, but you don't provide that service, or if you don't have, and you don't have your headquarters or your principal place of business in Vermont, and don't engage in any other type of money transmission in the state, you also do not need to be licensed in Vermont.
so if the state of Vermont contracts, or any company in Vermont contracts with a company in New Hampshire to do their payroll processing. They
Well-
don't have.
Well, this might be a company that does payroll processing. It has its principal place of business or its headquarters in Vermont, but it doesn't actually serve Vermont employers.
Okay, so
So
it's
they
in
might be
Vermont, but it's
serving New
really in New
Hampshire.
Hampshire.
Right.
Okay, I believe
That makes sense.
I had some company representatives talk to me on these issues. And it would mean they'd have to get licensed in
Presumably where they're doing their
a
business.
whole lot of states. Yeah. And, okay. And we will hear from them, I'm sure.
You will. I believe,
MMR
I
was.
think it was MMR, Chris Rice
Right, yeah.
is the contact person, and brought in a payroll processor to speak, as well as VFR, to talk about how many entities would be exempt under these criteria. So the third exemption is if you provide payroll processing to no more than 25 employers located in Vermont, have their business headquarters in Vermont, and no more than 500 employers anywhere, and you provide your payroll processing services that you provide involves less than 300 Vermont resident employees, regardless of where the headquarters or principal place of business is located. So if you meet all of those, and in addition, you've not been convicted of, et cetera, of some kind of felony, and that applies to the company and key individuals, controlling individuals in a company, to any kind of felony in domestic, foreign, or military court. You've never had a financial services license or professional license revoked. Again, that applies to key individuals. F, line 10, you do not otherwise engage in the business of money transmission in Vermont or other activities that would require a license. You do not receive, if you receive and hold money or things of monetary value related to transmission, that money is kept in segregated trust accounts or deposit accounts that are FDIC insured. So these are all related to one exemption. You have to meet every single one of those for that third exemption. So these are companies that do provide payroll services in Vermont, to companies located in Vermont, but no more than 25, no more than 500 anywhere. So there's ones that are considered smaller, and you'll hear about the market and what this would entail. Section 16 relates to lenders and loans and charges that are permitted charges with respect to a loan. There are each type of charge that is permitted under current law is listed. So these could be, well, here are two that are just included here. The reasonable cost of private mortgage guarantee insurance.
So is this the Rocket Mortgage?
Yeah.
Okay,
Yes, it is.
we will hear from them, but I've heard they have something in here that.
So their proposal is to allow as a permitted charge with respect to a loan, in their case, mortgage loans. Discount points at the request of the borrower for the purpose of reducing, and which in fact result in a bona fide reduction of the interest rate or time price differential applicable to the loan. So if somebody wants to buy points, put down additional money that would lower the amount of their mortgage or reduce their interest over a period of time, they can do that, but it has to be at the borrower's request.
Okay.
So this is specifically authorized. Because like I said, all of the fees for a loan has to be explicitly authorized under law. And then, so the next few sections, starting with section 17, these are 3 studies to be conducted by Department of Financial Regulation during the interim. They're all going to be done in-house. There's no appropriation attached to any of them. And these are issues that were discussed in committee with respect to either legislation that had been introduced or model laws that came up, or just topics generally that were of concern to the committee. So the first one, section 17, this is a study about suspicious activity and allowing banks to put a transaction hold on an account if the bank employee has a reason to believe there might be some kind of fraudulent activity or scam going on.
Would this get to you won the lottery, we sent you a check, but then there weren't sufficient funds to cover that check?
And then sends you to your bank to withdraw money before you collect or something.
And you sent them $2,000 to cover your processing for your new Cadillac and vacation home. And they send you a check,
Right.
but then that check essentially bounces.
Right. So if a bank employee has a reason to believe that somebody might be the victim of a scam, that they might be able to put a hold on just that transaction. It was a tricky issue because, of course, account holders to get access to their money when they want their money, but trying to strike that balance of when you're acting in the best interests of a customer. In any event, it's a study. And so to just kind of look at what the various regulatory models are and how to strike that balance and then report back. And just so you're aware that, again, it's the commissioner that's going to do the study, but just asking that the commissioner consult with the Vermont Bankers Association the Association of Vermont Credit Unions, AARP, Office of the Attorney General, Vermont Legal Aid, and anybody else that's deemed appropriate. And then it just lists the number of things that would be applicable, things to look at, which financial institutions should be subject to the model, whether particular account holders like seniors or vulnerable populations should receive some kind of heightened protection, any notification, consultation requirements, time periods for a transaction hold, notification to BFR, continued account holder access to other funds for transactions that are not suspicious, and then immunity for the financial institutions that take such action under, a reasonable belief that they're.
And these are all studies.
These are all things to look at and consider as part of coming back with a proposal on or before November 15th of this year. Will come to this committee as well as the House committee in the form of draft legislation. The next study, this came up in the context of a House bill concerning protections for victims of coerced debt, which often arise in the context maybe of domestic violence situations where somebody takes out accounts and loans in the victim survivor's name without their consent, or their consent is coerced. And so the proposal here is to try to come up with language that's generally agreed upon that would protect the victim of the coerced debt so that they're not obligated to repay, but the financial institution could go after the perpetrator if appropriate. And then also, if the bad debt is on the victim's credit report, having that information removed from the credit report so they're not hindered from seeking other loans, employment, housing, whatever. So that's basically the subject. This is something that was in the process of being considered under the Consumer Financial Protection Bureau. I don't know if that rulemaking is going to continue. Other states have looked at this and taken action. So the proposal here is to basically keep working on the language and see how to, again, protect all of the interested parties. And that report would come back to you on January 15th of next year. And then finally, the last study concerns genetic privacy. This came up, and you've probably heard about it even more recently, about what's it, 23andMe, those companies that do genetic tests, right? But now in bankruptcy and what might happen to that data, whether they can sell it, who can they sell it to? So whether there should be additional protections in Vermont law, specifically with respect to insurance companies potentially having access to someone's genetic information.
Didn't we do something about this a few years ago?
Well, like last year.
Did.
Yeah.
So I think what the current law says is you can't require someone to take a genetic test and condition insurance on their taking some
Right.
genetic test or right?
Yeah.
And then also you can't take into considerations a family member's genetic unless it's in the individual's medical record.
Right. Right.
The question here is, well, what if the insurance companies buy the information? It's not part of the medical record, but they have access to this broad database and they can figure out who's right. So it's broader than what's currently in
So I remember that
statute.
that was the last time I was on finance, and that took a long time to get.
It was
That was
a
deal.
long and painful discussion.
We had a couple sessions to get to that.
Because I remember with people from UVM and knowing your genetics proclivities,
Yeah.
yeah, better treatment and they didn't want anything in here because it would discourage people from getting tested. Of course, it doesn't seem to have stopped people from getting 23 and me getting genetic data.
That's right. But they might not have contemplated that a data broker could buy that and then
Yeah.
sell it to insurance companies, and the consumer might not even know. So it's trying to
Yeah.
come up with some protections to leave it up to the consumer essentially to have control of their personal.
This is just asking for.
And again, this is a step. Yeah,
The hard part will come when the study comes back.
right.
We'll have to make a decision. Okay,
So we are getting close to the end. So sections 20 and 21 concern Medigap insurance. This is Medicare supplement
Yeah.
insurance that covers your out-of-pocket costs, offered by private health insurance carriers. So Jen Harvey worked on this language and she can talk in greater detail. And I will just briefly explain my understanding. I think what happens now is if there's an increase to the premium, DFR does their own internal review of that increase to make sure it's supported by the documentation, whatever. And then there's also an independent review, external review. The proposal here is to eliminate the requirement of an independent external review. And again, you'll hear from DFR. But that they do their own review and very often they arrive at the same conclusion. However, in terms of process, there is a requirement that if it's to increases more than 10% or whatever, that there's public hearing, there's opportunity for folks to
an input.
have some input, but that's very generally what's being
Is
proposed.
it the study?
No,
No, this is an actual pool. Okay,
It
out of the studies.
And so the Commerce heard from Blue Cross Blue Shield, obviously the Department of Financial Regulation, Healthcare Advocate, Ombudsman, Mike Fisher. So presumably as well, Jen, you can hear more about.
Yeah.
The proposal. And then that brings us all the way.
Car sickness.
Sorry. Okay, section 22. This is the last substantive section. So, and this is related to what you're going to hear also about next week. So last year, when you did the money transmission rewrite to that chapter, you had specific language related to virtual currency kiosks. Those are like those ATM type machines in convenience stores. Where people can put in cash.
Yeah.
And that is converted to cryptocurrency, deposit in somebody's digital wallet, and there were concerns raised. One, that because they're not necessarily bank, not associated with the bank account, there's a certain level of anonymity.
Yeah.
And that maybe it was promoting fraudulent activities. And so wanting to just make sure that whoever was using the kiosk understood what they were doing and what the risks were. And so you enacted some provisions, daily transaction limit, a fee cap related to the service, and ensure that they get licensed in the state. You also imposed a moratorium on any new kiosks in the state. So that those who existed and were licensed could be grandfathered in, but no new kiosks. And then asked the department to do an additional study about what consumer protections might the state consider to allow the business to continue. So the DFR did do the report. You'll hear from DFR about their findings, and they did propose. I think they had like 7 maybe recommendations for additional consumer protections. So you can hear more about those. You can also speak to Commerce, but
Those aren't in here though.
those are not in here.
So I remember the House was somewhat more conservative than the Senate last year.
The House took quite a bit of testimony. hearing from, there's one company now, CoinFlip, that operates 3 kiosks currently in Vermont. Obviously wants to keep doing the business, put forward their own proposals.
Yes, which is what's in 129.
That's right. And I think there wasn't, I think Commerce was hoping that DFR and industry would be unanimous on, and it wasn't, but you should, apparently they've been talking, but in the meantime, Commerce said we're not prepared to move forward. We would like to extend the
They
moratorium.
didn't feel ready.
They weren't,
Came in here and DFR had more time
yeah,
to do things and we did some changes.
you did, and you grandfathered in the existing, so they could
Yes,
stay.
yeah.
But yeah, but before allowing new businesses, you wanted to be
DFR to
reviewed.
have some regular.
So anyway, the only thing now that's being proposed is just to extend the moratorium for another year.
Okay.
And that is pretty much it. The act takes effect on July 1st. Except for those Medigap provisions, they would take effect on January 1st next year.
Yes, committee, any questions? We will start hearing from DFR and affected entities and anybody else that wants to be heard of this. Technically, this is kind of mercifully short and understandable.
So far.
There've been a lot more technical terms. Okay. Committee, we have about 15 minutes until our next oh no, we've got 10. That's right, I'm sorry. It's Friday. Come on up, 10, I think we're missing you all week.
Well, my piece can be quite short. Within the bill, there are really two. So for the record, Ted Barnett, Joint Fiscal Office. Within the bill, there are two pieces with potential fiscal impacts. The first is from the exemptions for money transmission fees, or transmitter fees for small payroll processors, under current law. Money transmitters broadly, including payroll processors, pay a set of fees at application, a set of fees renewal. It's $1,000 for an application fee, $1,000 for your initial license, and then a $25 fee for each delegate location. This is if you're Western Union and they have a delegate location in a store somewhere, right, to transmit funds. That's when a $25 fee would come in.
It used to be Western Union and you could telegraph money. When we started this, it's become a lot more complex.
Correct. And so, yes, and then at renewal, they're paying that $1,000 license fee and $25 for each of the delegate location. Overall, those fees brought in about $328,000 for the Financial Institution Supervision Special Fund. And total fund revenue in fiscal year 24 was 3.6 million. That's one of those funds from DFR that the overage gets swept into the general fund as a transfer. In this fund, there's not a transfer every year, but in the fiscal year 2025 Appropriations Act, there's a $1.1 million transfer. So just probably wanted to paint the overall scene of money transmitter and relay the information after talking with DFR. They see this affecting fewer than 5 entities. They're really small. There are not very many of them in the state. And so we're seeing that there is very minimal fiscal impacts of those exemptions. The second piece is we took a look at the Medigap premium increase review process, because within current law, there's a provision that allows DFR to do some bill back for those independent reviews. After talking with DFR, they don't see a change in workload. It repeals the independent review, but makes them do a mandatory review. So it's kind of a wash. They don't see a substantial fiscal impact one way or another.
That's it.
That's it.
Okay. I think my mind is hearing de minimis.
Absolutely.
All right. Usually insurance regulations are gonna be huge.
Thanks, Madam Chair. I don't have a specific question for Ted, but I do want to, the Medigap proposal, I definitely want to hear from.
Oh, yeah.
Yeah, because that whole area is problematic, so I want to understand what this.
So we will definitely talk to them. Okay, thank you. Okay, committee, you have until 2:30. To take a break.
We got two is on his way over to.
Oh,
put more money.
so they're on, all right, then maybe we don't have if they're on their way
Okay.
to Friday, assuming weather stays there.
Oh, yeah.
Get out.
We have to go offline.
Stay on. I think it's easier. We can stay online than switch on and off. We are just waiting for our drafters for the next section to show up and walk us through. So it's changes to the Vermont Economic Development Authority, VEDA. I assume we need to hear, well, we hear from you.
Madam Chair, my piece of this is about 30 seconds.
Wow.
It used to contain an appropriation. It no longer does. It's in the big bill now.
Okay, so do we need to keep you? There's no fiscal impact in this one?
I can still hang around.
Okay, keep an eye on us.
So since this is fresh in our minds, what we just talked
Yeah.
about, who would we like to get in to testify? DFR?
DFR, Heather, as a group, I'm sure Chris Rice would like to, or has a group.
What about the Medigap?
Mike Fisher.
Mike Fisher, that's a study.
They're not.
No, that isn't,
Not-
that's
so
right,
section
that's the one that's doing the Weston, so we'll get Mike in.
Just out of consensus.
Oranges look like they might be a
Yeah, we're
Point
cleaning out, cleaning out our options.
I heard I brought.
Who's putting their wrappers back?
Randy.
Come on, guys. No.
I might be guilty of
No,
that.
because the bear.
Every once in a while, not very.
The bears will eat anything.
This is true. I don't care. I'm going to feed the birds this weekend if I get 10 inches. No.
Oh, my God, no.
I filled my fear this morning, but I don't feel like we can leave my brother's house, right?
Yeah, I just put a little bit
You're gonna
in.
roll them in the bears.
I'll get those stuff they don't
anymore.
like. But yeah, I don't know how it's going to snow and be 38 degrees. That sounds like. slop.
I'm very depressed.
But I don't think it's going to be good traveling weather for anyone, including bears.
The shop I emailed Grady. Good.
What?
Grady?
Maybe a drafting attorney.
Yeah.
Maybe.
Yeah. Divide up.
Says language changes.
What's that?
The language changes.
Yeah.
Has to be.
I don't know.
We'll see.
Looks like enough for me to be able to, I know, but do it wrong. Yeah, it'll be fun. Rusty.
Yeah.
For.
Well, when you come and travel around with me next fall, we can practice. And I can teach you a little bit of Czech, go be then, yeah, that's what I'm gonna. I have to,
Help on some of it.
Okay, I'll start there.
I feel like it's.
Okay.
Before.
Yeah, I'll start with them.
But you might,
They use that.
depending on the nature.
Oh, okay, you may have,
But I hadn't forgotten about it.
it's just a good, reminder.
Are you gonna want me
I think so,
as,
whenever
I
you're
will,
ready.
I will
Yes.
go ahead and begin to get set up.
This is going to be a little
Will
easier.
you speak?
I'm excited.
See?
Yeah.
Better than I felt.
I love those are beautiful.
Yeah.
Like 25 reasons to be a front cups right now. Not going to.
What?
Candy.
No. No, she's dead.
It's like, oh, she said, it's like, hey.
We're
Trick or
treating.
treating.
We're not throwing.
that's the center of it.
No candy throwing.
That's bad.
Back practice? Oh, I did not back brought any.
Okay, we're
Surprise.
on
Oh, we're
live.
live, we've
We're
been live the whole
live.
time.
I muted it before.
Okay, let's put the sound on, camera on, and the candy away, and we're going back to H398. Okay, Cameron.
All right. For the record, Cameron Wood, Office of Legislative Counsel, here to walk through H398 as it passed out of the House. I will do my best to be somewhat succinct on a Friday afternoon. A lot of this bill is more technical in nature. We do have some substantive amendments, some of which are more minor and some of which are kind of capital S substantive. But I'm gonna share my screen and walk through. And again, I'm not gonna pause at every single kind of technical piece, but I'm gonna do my best to get us to the substance through the entire 34 pages. Share screen.
You know, did this happen at the request of VITA that these are changes
Yes, ma'am.
that they feel? Okay,
Yes, ma'am.
we will have VITA in to explain.
And so, yes, to start with, I would say my understanding is all of the recommendations here are coming from VITA. I worked with their counsel on a lot of pieces and making sure that, it worked. So, agreed, Madam Chair. I think, I can speak a little bit to, kind of the language, if you're wanting a little bit more of the why.
Yeah,
VITA may be
well,
the best to come in and talk.
Just tell it what it says and then we'll have them in to
That works.
explain why they need it.
Okay, so we're on the first page, section 1. There's only a few sections, but what we're doing is we're amending the entire VITA chapter here. For those who may not be aware and are following along online, VITA is the Vermont Economic Development Authority. It is a quasi-governmental entity that was created by the legislature essentially to help provide low-cost loans and financial assistance for economic development throughout the state. So they support businesses, local development corporations, municipalities, et cetera, throughout the state and developing economic activity. So the first change that I'll just kind of pause and highlight is here in the definitions section. We're striking some language here, which I'm just gonna I'll get to it later on in the bill as to why it's being struck here and how it plays there. But to fund an eligible facility or eligible project, we're adding that the project must be used in a trade or business, whether or not such business is operated for profit. And, I'd see that as kind of a minor technical change here, just to ensure that projects have a business purpose.
I think there's a couple words missing though. As I read it, it should be industrial, commercial, or agricultural enterprise or endeavor approved by the authority that is used in a trade or business.
Okay, yes, I could see that.
Because without it, it's just authority used in a trade or business. It's not the authority that's used in a trade or business.
It's the enterprise or endeavor.
It's the enterprise or endeavor that is used.
Yes,
I- that-
I
that's-
totally recognize the,
It
yes.
confused me when I was
Yes.
trying to understand that change, but
Totally understood, and I see exactly what you're pointing to, and I think that makes
The
sense.
party is our premier. Don't ask for about fewer or less.
yeah, I will find that in here and I will change it.
I love that, that's, you know, words matter, so,
Words matter, especially in our business.
yes, 100%. So, okay, noted, yes, ma'am.
Okay, thank you.
Okay, so to the next page, so we're adding, so as you can see, we're adding a subsection T here under eligible facility or project, so very extensive list of what falls under that, and we're adding that project could include any capital improvement, purchasing receivables, property assets, commodities, bonds, or other revenue streams, working capital program reliability or other insurance program. So these are things that they can now, fund. What you'll see for the remainder of this and the definitions, and this is where I get to pause and say, a lot of this stuff, all of these removals are technical amendments. Because if you see, they're all referencing subchapter 2. So maturity date as used in sub 2, as used in sub 2 under the mortgage payment. Subchapter 2 has been repealed. So it doesn't exist anymore.
Okay,
And so that's why these definitions are no longer necessary.
there's
And
no
you see-
chapter 2, so they
Yeah,
don't need
you
it.
see a lot of this throughout the bill where we're removing reference to subchapter 2. Okay, so I'm gonna get us to just notes here. So same thing here on page 3. Again, just removing definitions that reference a subchapter that no longer exist. Okay, I'm gonna pause on this section because I want to highlight the next kind of substantive policy amendment that you all should be aware of. As you can see in this, we're talking about the organization of the authority. And, these first two pieces are somewhat more technical, allowing them to appoint other officers from among its members, not just the chair and the vice chair. But what I want to point out is the change here on line 15. Currently, it states that the manager, the executive director of the authority, receives such compensation as may be fixed by the authority with the approval of the governor. They're recommending to strike with the approval of the governor. They've testified on the record, the governor never approves the salary of the executive director as it is. So it's more bringing the statute into alignment with reality, but policy decision for you all to make. Okay, moving to this page 4, this amendment here at the top, striking a report that was due back in January 1989. So it's simply,
I don't know. You might wanna keep
looking
that
for
in
that
there.
report.
it's definitely language that's not needed.
I think we can say we have not updated this.
It appears to have been quite a while.
Not quite as bad as the liquor statutes, which I believe had been updated since prohibition, but, yeah, it's been a while.
So moving on to the next section again, we're a reference to subchapter 2, we're gonna remove out. Okay, here on the bottom, section 215, this is just a technical amendment because rules and regulations are redundant and our drafting policy is to remove. We have rules, not regulations here, so it's just changing to be the rules, policies, and procedures. Moving to page 5, here's the next kind of somewhat substantive request here. So this section says that the authority must make recommendations and reports in cooperation with the Agency of Commerce and Community Development. This is the manager has to make the recommendations and the reports to the authority on the merits of any proposed project. And VITA's conversation with me and their testimony on the record is they read that to be very prescriptive in that they have to make a recommendation on every single project that comes to them. And from their perspective, they just, they see that there are projects that come to them that they don't feel that, necessary to get to that level. And so they're recommending to repeal this section. I highlighted for the House Commerce Committee, you still have the catch-all in subsection 6. So at any point, the authority feels like it needs information from the executive director. If they need to make a report for a specific project, they can request it and do so, etc. So I didn't see this amendment as, that much of a change. We want you all to be aware of the policy decision.
Doesn't preclude them, just doesn't say
Correct.
we have to do it on every single.
Yes, ma'am.
Okay.
So next, section 216, these are just, technical changes here, for drafting, moving to page 6. Okay, in this 13 here, just some technical changes except lines 10 and 11 that I will highlight. So the authority has the ability, or the authority has the authority to create nonprofit corporations, as you can see here. What this language requires is that the company that they create have at least 14 other members selected by members of the authority. So the authority itself has to be on the board of each nonprofit it creates, and the authority has 15 people. And so this saying that you need an additional 14 people, so then you get a board of 29. PETA thinks that that's a little unnecessary and excessive, so they're asking to strike that. So any nonprofit that the authority creates at this point, if you agreed to this, would be just the members of the authority.
Okay, so the authority can create a non-profit. All right, I'll ask them.
For what purpose?
Yeah,
What do they do that for?
that's what we'll ask them
Okay.
if they've ever done it and why. I could see maybe a industrial lending, not-for-profit manages a revolving loan fund or something. We'll find out if they've ever done it. They've asked to strike it, so I guess they think it is or could be used. But
Yeah,
definitely highlight that one for.
it looks like they create a nonprofit organization to contract with. That just seems really weird.
No, I think they have, they typically fund higher risk folks that banks aren't quite comfortable financing, and so they buy a lot of paper from Wall Street. And they will put in the necessary capital, whatever, so that the bank also will then feel comfortable loaning, but we'll let them talk, and we'll ask them what this would look like. But
The one that comes to mind for me, and I was just pulling up to make sure I was referencing correctly, there is in Title 10, there's a separate chapter, the Vermont Agricultural Credit Program that VEDA offers. And so, for example, that's an entirely separate nonprofit that is administered by VEDA. So I don't know to what extent they're needing to create multiple different nonprofits and for what purpose. That's where Madam Chair I would refer to them, but they do operate some for purposes of some of their different programs.
and we've asked them when the first round of farms really being in danger of going under, we asked them to do loans. And I know at one point they were closing on those loans very slowly because they didn't want to glut the market with essentially cows and depress the prices that the farmers that were being forced to sell out had to. And I'll bet you this is part of what was going on. They were just trying to protect the farmers. I think we continue to lose a lot of farms.
I'm gonna bring us back bottom of page 6. This is another substantive piece to highlight to you all. So the authority can delegate to loan officers the power to review, approve, and make loans under this chapter. Skipping the strike real quick, and to disperse funds on those loans. And the language currently requires the approval of the manager in each of those instances. What they have testified is they would like to change this to say, in the event they're issuing out a loan, they want to be able to follow their own policies and procedures. What they've said is they have very minor loans, sometimes just in the few thousands of dollars, and to have every single one have to go all the way up and be signed or blessed by the executive director, they felt was a little excessive. So they have, they could speak to what their policies are if you all have specific questions about that. But okay. Moving to page 7, again, strike through here in the sub A, as you can see, it's just a reference to subchapter 2. So these are records that they have to keep, and what is being struck here is them having to keep information connected with applications and approvals for applications under that subchapter. That subchapter, I believe, was repealed in 2016, I think is the last time I looked at it. So it's, yes, so.
Subchapter 2 was,
I believe it was
Repealed?
2016.
Okay.
Yeah, and I will triple confirm while we're sitting here, but, okay. The next piece in application is the request of VITA to strike mortgage insurance. My understanding is they're not issuing those, so, I will leave it to them to explain that. Moving to page 8 and then page 9. So I'm just pausing here to highlight this entire section is related to local development corporations and loans to them. Now I'm going to go to page 9 where you'll see the change, which is allowing the loans that they issue to these entities to be repaid in 20 years as opposed to 10 years. So it's extending that period out. My understanding from them is this puts them more in line with what, you know, their banks that they work with, et cetera, you know, the terms that they typically see.
Considering they might be doing some bonding, those are the terms.
I'm new to this committee, so pardon my ignorance, but can you give me an example of what a local development corporation is?
Others may be able to give you a better example than I am new in this space as well.
I'm trying, I'm.
Rural edge in my area, local development. Well, housing.
Well, that's,
Like CVO, yeah, or
no,
or.
there's, economic development. Yeah,
Look, there are, local economic development authority.
Barry has an economic county.
Yeah, and I don't know what there might be multiples in Chippewa County.
Yeah.
Yeah, there's like the Addison County Economic Development Authority. Or
Economic, isn't that what
Development.
CVO is?
It could be, yeah.
Thomas, do you know?
CEO is the one for our area. I don't know what Steve is. That's part of Burlington. This is Burlington.
Yeah, the city may have no economic development, but
Corporation.
yeah. But they may get some of their money through VITA. VITA is our version of a state bank. It loans, but slightly higher risk loans than a regular bank usually. They work with a bank. Their participation cuts the risk to the point where the bank feels comfortable. And we will have their director come in and do a much better job of explaining it.
No, I didn't mean to.
So and I'm
interrupt,
just
but
grabbing to the
Thank you.
definition real quick. It's,
Yeah.
Any nonprofit organization incorporated in the state for the purpose of fostering, encouraging, and assisting the physical location of business enterprises within the state. That's not giving you an example, but
Right.
there is a specific definition there.
Thank you.
Anything with EDC on the end of it, it's initial.
But it's not a chamber of commerce.
No.
Or,
No, it is a specific organization that is formed under their rules.
okay,
They are not for profits
Yeah.
and they are there for
So-
promoting economic development
okay,
in a specific region.
great, thank you.
And they will work closely with VITA. Actually, VITA was where we were looking to finance the CUDs.
This next amendment here allows for the electronic signature of bonds that they issue. There's another section which includes that as well, so they're not all required to be manually signed. Moving into the bottom of page 9, so the pieces here under this section are simply taking it from listing it as a state project to listing it as an authority project. I think this is more of just, to clarify that these are projects that are run by the authority, not the state of Vermont here. So, as you can see, it's just in the title of the section, in the first sub A there, the authority may engage in projects, et cetera. For sub B here, for purposes of engaging, the authority shall act on behalf of the state as opposed to act in the name of the state. So I think it's just clarifying that.
Sorry, I have a question on lines 1 and 2 on page 10. The word municipality as used in this section, in the sections of the subchapter
Mhm.
shall mean the authority.
Mhm.
That is weird to me. Yeah, go ahead.
I was gonna say, I know in this section, I believe there's sections related to municipal bonding, and so I may not be the best to speak to why this is the case or like how that actually works, on the ground. This is current language and.
Yeah,
I like that below the other directory.
yeah, I mean, just because there's specific definition of municipality, and I know this is just saying for this subchapter that it would be a municipality, but it seems weird to me.
And I don't know, I don't know the long history of this, why it was set up that way and all the implications, but I will make a note for myself as well.
Okay,
At some point, we set it up like we did. East that they are municipalities, a
Yeah.
fire district is a
but
municipality, it gives
that is a
them,
very different thing.
yeah.
It seems
So
odd
this
to
will
me.
ask why that is.
Might check.
Maybe their ability to bond,
I think that's probably.
the ability to bond.
Yeah, it just seems like it would be a state authority, not a municipality, but.
I think we're walking thin line where they don't have the full faith and credit of the state. And that can sometimes lead to contortions,
Yeah, okay. Interesting.
to make a bad loan. The general fund is not covering.
Page 11, and the next section here related to bonds. I'll, comment again, adding electronic here. But this strike through language is stating that similar to how I said earlier with the amendment, it doesn't require the manager to sign off on every loan that's issued. In this section, it's stating that the bonds issued shall bear the signature of the manager or treasurer of the authority or authorized designee and agent who doesn't require the chair or the vice chair to sign off as well.
They assign someone to be bond manager.
Okay. Let's see, I'm gonna keep moving. Okay, I'm gonna pause here on page 12 because we have a lot of strike through moving into the next few pages, and I want to clarify it's all technical, but why are we doing it? So under the sub 1 here, it says before issuing bonds for construction for speculative buildings or small business incubator facilities, the authority shall make determinations and incorporate into its minutes findings that, and they have to make all of these different findings, the projects within the scope of the chapter, the proposed sites, will be located on adequate lands, adequate access to roads, the project complies with the applicable environmental zoning planning.
It sounds like this was new in the legislature. Was doing a bit of micromanagement.
No, all we're doing here though is we're removing all of this and we're saying because it exists in a different section. And so we're removing all of it, as you can see now on page 14, to simply say you have to make all of the findings that are required in that section,
Okay,
which includes all of this information. What I don't know is why all of the information was put in 3 different locations when we could just cross-reference back to each other. And so that's all this is doing for this piece. It's saying all of those findings, you still have to make all these findings because, it's appropriate if you're going to fund, these entities that, they're complying with the environmental and zoning requirements. There's adequate access, et cetera. You want all that stuff, but it's just saying you need to make all the findings as required by that section. And then same thing here in the sub 2, before issuing bonds for an industrial park, you have to make all these findings. Guess what? All the way down on page 16, they're required in section 237.
Okay, so just 237 covers everything
Requires all
that
of
we
this. Yep.
killed a couple trees to write
Just,
before.
yes, ma'am, just trying to shorten.
Now
up
you
the
just
section a little
say-
bit. Yes.
It's in one spot and you have to do it.
Yes. Okay, now the sub 3 here and 4, this gets to back to what the chair was mentioning a second ago. These two sections are current law. We're just including them here to apply to both the sections above. So this isn't really new language. It just looks new because I had to move it from a different piece that we've deleted. So it's saying that the financing and security, it doesn't obligate the state. And then the 4, it doesn't create any debt of the state with respect to those facilities or obligations. So that's not new. It's just has been deleted. So we're including it here. Okay, now,
They could get even full faith and credit at the state.
so on page 17, again, removing all of this sub G because it's referencing subchapter 2. So we're going to get to page 18. This is not necessarily new either. This is just moving it because it's been deleted above twice. We want to have it here. The determinations and findings of the authority are conclusive. So somebody can't come back and challenge them and say, well, you're finding that there was adequate road capacity. You disagree with it and challenge them. So this is language that's in all of their different programs and subchapters throughout the VEDA chapter.
And the authority being the municipality, right?
No, this is the authority itself.
Vermont Economic Development.
Okay, yeah. Which is apparently a municipality for this chapter.
Under that piece, the word municipality meant the authority, yeah.
Yeah, exactly.
Yes.
Oh, and that, okay.
Yeah.
Okay. These next few pieces, I will walk you through specifically what they are, but again, if you're wanting information about why VEDA is asking for this, the comment that I've got back is this is legal authority that their bond counsel has requested. But these are new sections which would allow the authority to, pledge security and enter into security and insurance and other form of credit enhancements related to the funding that they're providing in this section. And then the next section is allowing them to purchase their own bonds. So the bonds that are issued under subchapter 4, the authority may hold them, resell them, cancel them, etc. And then the subsection J is no member, director, officer, employee, or agent of the authority is personally liable on the bonds or any contract entered into unless personally liable or accountability is the result of intentional misconduct. So shielding their staff from personal liability for their issuance of, loans, etc.
Unless they were doing something else.
Yes. Okay. These next few sections, it's the next few pages all taken together for subchapter 5. You'll see it's listed as direct mortgage loans. What they would like to change this to are direct secured loans. So allowing them to take security that doesn't have to be mortgage. So allowing them to have other, secured loans or secured assets, etc. So
Mickey Mantle rookie card that was seated in here, yes.
View the card.
that's awesome.
How many million is that worth? 100 million?
Only 50.
29.
Only 52,000?
No, for the.
That's our wealth, but
Okay.
it's about.
God had a real one.
Love that.
I'm sorry, send it back.
That's right.
A real Mickey Mantle. You said.
It's a
Smart
real
way to
replica.
figure out something.
It's a real facsimile.
Okay, but if someone did in fact possess a real one, they could use
Yes.
something else as collateral.
So as you can see on the one, they can, make loans secured by mortgages or other assets. And it's really just going through these sections again, where it's mortgager, so obligor, so just expanding their ability to have security for loans and not specifically making it tied to a mortgage.
They will tell us why they
Yep.
feel they need that extra.
And so that's, again, page 20, I'm just kind of scroll through these relatively quickly. Again, we're just striking where mortgage is, secured loans, adding mortgage or security, to specify that it doesn't have to be a mortgage. So, all of these changes throughout these sections, I'm on page 21, moving through, these are all equally just adding to or carrying out that change. And so I'm on page 22, again, mortgage being struck, obligor being added, banks and insurance companies changing to financial institutions, all just these technical amendments to carry out what we were
So
talking
we
about.
decided to do the first ones. All of this.
All of these go with it, yes, ma'am. Okay, which brings us to page 25.
Yeah.
So, Vermont Export Finance Program is one of the programs they offer. This is a simple technical change to, it says excess revenues shall be deposited into the development fund. They're not even sure exactly what the development fund kind of means. So,
Who knows where that money's going?
the Vermont Jobs Fund. You should ask them that question, Laura.
Okay, come on, it is fine. It is fine.
Probably go ahead.
Let's get through this. And then everybody can go home.
Okay, so it's clarifying that it goes into the Vermont Jobs Fund, which is their primary fund that they use to, do their financing, et cetera, et cetera. Okay, so the next two sections should be read together. This is 280A and then 280B, which is here. And so I'm going to back up for a second, and I apologize for the scroll. I'm going to kind of scroll a little bit back and forth between the two of them. My understanding of how this works, and again, I'm new to this area of the law in VEDA as well, so I'm learning. The chapter that governs VEDA has, I think it's like 14 different subchapters, and they are all different programs or projects, if you will, that they operate. So like one of them recently, I believe, was added, is related to providing loans for energy development. And so they have all these different projects, and each of those projects have their own, criteria in order to fund certain projects. Okay. This, my understanding, was kind of intended as a catch-all, i.e. if a specific project or facility doesn't fall neatly into any of those different subchapters that they have, then if it meets the Vermont Sustainable Jobs Strategy, then you can fund it. So when I first saw this, we started looking at, well, what is the Vermont Sustainable Jobs Strategy? Well, that's where you go to 280B. And in 280B, it has the governor, with advice of the Secretary of Commerce and the authority, developing the Vermont Sustainable Jobs Strategy. And this section 280B has where they work through, they develop it, they then have kind of a public comment period, they receive feedback, they amend it if they want, and then they can issue it. When I first spoke to VEDA, they found the Vermont Sustainable Jobs Strategy, and the only one that they're aware of was issued by Governor Dean in 1999. So it hasn't been updated, reissued, etc. since then. Okay, so again,
But the
if
job.
a project doesn't fit neatly into all their different programs, that's where this comes in, because it has to meet this job strategy, and then it can still be funded. So what the House Commerce Committee was concerned about was, if the job strategy, which I actually have a copy of, if the job strategy, new governor comes in and were to change it, does that somehow, call into jeopardy any of the projects that were funded by it? And or what if a new governor comes in and wants to be much more restrictive to what the current job strategy is, and they had concerns about it? This is the
Especially for things.
this is the job strategy.
That's the job set.
This is the job strategy
Wow.
that was signed in 1999. So what the committee wanted to do was, they said, listen, how about this? Why don't we take the job strategy and let's just put it in statute? Let's take what was developed and let's put it here. So that's what these two sections are doing. Up here on 280A, what we're saying is, the authority may develop, modify, implement any existing or new financing program, provided that the project meets the criteria outlined in the job strategy, which is in section 280B. And you don't need mortgage insurance anymore because it's been repealed. We are adding here that projects, this is a list of example projects that could fall under the Vermont Sustainable Job Strategy. They wanted to be clear that the authority they have under Chapter 16A, which was the Agriculture Credit Court that I mentioned earlier at the beginning, that's in Chapter 16A. So they wanted to make sure that that was going to be safe and would fall under things that they could fund under this Vermont Sustainable Job Strategy piece. So that's just added there for clarity and safety. Then you get to 280B. Everything in here is being struck. So the governor and how the job strategy is developed and the public comment, et cetera, it's being struck. And then this is what would go into place. Before issuing funds, facility of the project, they have to make a determination that the project materially supports one of the following objectives. Madam Chair, you let me know if you want me to read through all of them, or you all can read through them in your own time. It is up to you. Okay.
Committee, you want to read it at your own, and we'll have them go through that, I think. Because they can tell us why, and that's what the question is going to be, so.
Very quickly, you'll see creating sustaining employment, providing quality employment at wages and benefit levels sufficient, promoting economic opportunities, advancing overall growth, et cetera, et cetera. One thing that the House Commerce Committee did specifically want to add under the sub F, you'll see it's encouraging economic development projects that reduce, mitigate the pollution of land, air, or water, keeping material out of the waste stream, et cetera. The House Commerce Committee wanted to add this language right here, eliminate the effects of climate change. So that's one small piece. So again, taking this strategy, putting it in statute, that way it's there and it won't, it, in theory, wouldn't be reduced by a potential future administration.
Yeah, I'd eliminate.
Yeah, I mean.
I might look more and more like mitigate. I don't know.
Well, it says reduce, mitigate, or eliminate.
Okay, all right, then that's better. Okay.
Yeah.
Understood.
But, okay.
Eliminating is
It's
high
aspirational.
Okay.
So it was, keep in mind that it's not just climate change, it's the remainder of that list as well, pollution of land, air. Water. So
Yeah, all right.
Yeah.
I agree that would be a large task and a big challenge to eliminate those things entirely. But okay. So that's the remainder of this. Again, we're striking the sub B where, the job strategy has to contain certain criteria and how the governor goes about in adopting it. And this is saying that the authority can, create their own policies and procedures necessary to further define this and carry this out. Subsection C is about, so again, soliciting information from the public. That is all being struck. And we're adding in that, the authority has to take into account the criteria outlined above, the overall benefits of the project, and the amount of assistance requested. So that's all, again, just here in this method. Okay. Next big change, adding this subchapter 15, disaster recovery loan fund. So this is a fund that would exist within VIA, which would provide loans. This is on page 31, lines 1 and 2, provide loans and other forms of financial assistance to businesses and agricultural enterprises after a disaster.
Okay, did this get added by House Commerce or did FEMA ask? FEMA asked.
Yes, ma'am.
Okay.
So,
Because I
and I
know
don't,
we talked about this in economic development last year, the year before. And at that point, the conclusion was they were up to their eyeballs in loans. What they didn't have was money to pay them back.
Right.
So,
so
but it's probably good to have them have that.
Can I ask a question too? How does this interact with the bill that we just passed in the Senate? From the Committee on Agriculture to give out grants to farms that experience.
That was a
climate
recovery fund, so that's a separate. That's not a loan,
It's a grant.
it's a grant and it's, I assume, riding in the Department of Ag. These are actual loans.
It does say or financial assistance. In
Assistance,
theory,
yeah.
they could do grants. I think their intention is loans. In the, I believe in the governor's recommended budget and what was included in, it was in a form of this bill, was included in the budgets passed by the House, is a transfer of $2 million from ACCD to VITA for the purposes of kind of establishing this. One thing I will comment, there was some discussion among the House Commerce Committee about what, what's a disaster. And, to what extent, if it's declared by the governor or the president, maybe that threshold's too high. You want localized disasters, but there's not a lot of money. So we don't just want to be giving out money for any circumstance. So how do we go about doing that? The conclusion that they came up with is the authority has to consult with the Secretary of ACCD and the Secretary of Agriculture in determining whether funds can be available following a disaster event. So if event happens, they have to consult with each other. They will make the determination of whether funds can then be authorized to be dispersed from there. Except that if there's a disaster declared by the governor or the president,
Yeah.
they don't need a consultation for that level of an event.
Okay,
The remainder of this section is just, authority, create your policies and procedures, your financing programs necessary to ensure timely delivery. Another key piece that the House Commerce Committee inserted was this subsection C. The authority shall limit interest rates charged for loans provided to rates necessary to cover the cost of administering the fund, wanting to ensure that the rates were as low as possible, and then creating it as a revolving fund. The last few quick pieces here, section 2 is simply redesignating. So if you recall, there was one amendment where we didn't know where the excess money was going. It was going somewhere and it wasn't clear, and we're changing it to send it to the Vermont Jobs Fund. For some reason, the Vermont Jobs Fund is buried in subchapter 3, even though it really governs the entire chapter. And so we're redesignating this from 234, which is in subchapter, I believe it's 3, moving it up to subchapter 1, general provisions. So that's all this section is doing. It's making a few minor tweaks. Again, it's technical cleanup to say that, this fund shall be used by the authority as a non-lapsing fund for the purposes of the chapter. It's really the fund that they use to govern everything, and they can speak to that. That's what these amendments are here in this section.
okay.
Is this fund the same thing as the Vermont Sustainable Jobs Fund? Okay, so we have the Vermont Jobs Fund and then the Vermont Sustainable Jobs Fund,
And you have the Vermont Sustainable Job Strategy
which is different.
that we talked about.
Oh, that's the Sustainable
Yeah.
Jobs Strategy.
Maybe
But
There
water
was-
those.
There was discussion in House
Still
Commerce about whether this should be changed to something different because of that.
Just
Like,
take
we
out the
have
word
so much,
sustainable.
so much going on there.
Wow.
At the end, they were ready to move the bill. So,
Okay.
Okay, we will have Vita answer all the why questions. This is the what.
and I have a few follow-ups on the language piece of the first page, and then I'll also do a little checking in on the municipality piece
Okay.
as well.
Thank you. Do you want to take the hot seat or do you want to stay in the cheap seats? Because I think you told us.
I'll come up to the hot
Says 30
seat.
seconds, we're gonna hold you to that.
Yeah, buckle up. This is the most controversial 30 seconds of your week. So, hello again, Christopher, Joint Fiscal. There is a fiscal note posted that I'm not going to read. I'm just going to give you the quick highlights. When this bill was introduced, it contained a $2 million appropriation. As the House did its thing with the bill, they deleted that $2 million out of the bill and put it in the big bill, where you will see it in section C107. What this does is, and this is consistent with the governor's recommend, is in FY25, in the current year budget, there was $7 million transferred over to the BGAP program. They don't need all $7 million. So what the language does is repurpose $2 million of that $7 million in FY 25 to stand up this program. It's possible you'll need more money in the future, depending on the demands on the fund. The interest rate is meant to be set at a rate sufficient to cover the administrative costs of running the program. That's the fiscal budget.
Okay, then that will go through approach, not us. Okay. Thank you, committee.
Amazing.
That is it. We will get Vita in and